Should I go with stocks or mutual fund? These are not same. These are two different worlds altogether. Most of them talk about, no sir, I will invest directly in stocks. Number one, you have to manage it on your own. The second, SIP. The third, the fourth benefit, they could control the loss. The fifth difference, I don't have to pay every time the fund manager sells the stocks. You understand what I'm saying? Sixth one is demat account. And the seventh one is cost. You'll end up paying a lot of brokerage. 7 different differences between stocks and mutual funds. Which one to pick?
So ever since you get your first salary, I'm sure there are a lot of people lined up near you giving you advices that you should be putting your money here, you should be investing in mutual funds, you should be thinking about stocks and whatnot. But soon you'll realize that not a lot of people have the actual idea of what stock market and mutual funds are. Most of them will just give you half-baked news that they saw on some Instagram reel or YouTube video. And then you take that half-baked advice and invest in stocks or mutual fund. And then you realize that those lessons or advices given by these people were not really helpful. So now this is why it becomes very important to have your own knowledge while you're spending your own money. Now in this video, we will be taking care of that. We have our mentor coming up, Mr. C.S. Sudhir, renowned for his expertise in personal finance and investment strategies. And in this video, he is going to teach you the difference between stock market and mutual funds. So let's get started with the video.
When I talk about mutual funds with people, most of them talk about, no sir, I will invest directly in stocks. So the very important decision you should make is, should I go with stocks or mutual fund? What is best for me? How do you decide? This is a very important question you should decide. If you don't have clarity on these aspects, it's going to be tough to make decisions. Because what happens, once you start investing in mutual funds, you will always get attracted to stocks and you will start, thinking about investing in stocks directly as well. So I'm going to give you about, 7 different differences between stocks and mutual funds. Which one to pick? Should you go with stocks or mutual funds? As I explain, I also show you those benefits on the screen so that you can make out of it. So what are those 7 differences between stocks and mutual funds? First, I want you to, before I get there, let me give you the definition of these two, right? So, stock is an investment. Mutual fund is an investment vehicle. You understand the difference? When I buy a stock of a company, I'm basically purchasing ownership in a company. When I buy units of a mutual fund itself is not an asset. It is basically buying another underlying asset. That is, it can be stocks or it can be debt or bonds or government securities, whatever, right? So I want you to understand the difference between these two. So mutual funds, when you invest in mutual funds, you basically get to buy stocks. But when you invest in stocks, you get to buy stocks directly, right? So I want you to understand stocks and mutual funds. When you understand these two, these are not same. These are two different worlds altogether. Okay? Because stock is a very limited definition. Mutual fund is a broader definition. I'll tell you why mutual fund is a broader definition. Because you can invest in debt mutual fund, you can invest in balanced, hybrid, various options. When you have to invest in a stock, it's basically buying a part of the company directly. And that can happen even through mutual fund. The problem here is, in mutual fund, if I'm investing in any one mutual fund, you will not invest in one company. You will invest in maybe 20, 30, 40 companies, right? So let's understand how these two are different and what are the key differences. Number one, when you invest in mutual funds, you have an expert fund manager to manage your money. So there is expertise. But in stocks, it is your expertise. How good is your expertise? You know it. But when it comes to mutual fund, there are expert fund managers to manage your money. But in case of stocks, it is you who has to manage. So how much expertise you have? Will you be able to really make right decisions? Will you be able to predict which stock is going to go well? Which company is going to do well in the future? You may not have that kind of clarity. But in case of mutual funds, these are the experts. Right? So that is important. The first benefit here is, in mutual fund, you're going to give your money to someone who is an expert. In stocks, you have to manage it on your own. And to manage, you should have the ability, expertise, which you may not have. If you have it, great, that's different, right? The second benefit, the difference here is SIP. In mutual fund, I can say, hey, I'll invest every month 5,000. I can keep doing SIP here. But in case of stocks, there is no SIP concept. I have to buy new stocks on my own every month. There's no way to do SIP here. So you can't say, hey, every month I'll invest 5,000 for the next 10 years. No. Mutual fund you can do. Stocks you can't. Stocks, every month you have to buy. There is no SIP option here. You know that investment mode, SIP option is not available in stocks. The third one is diversification. When I buy a stock, I basically buy that company's ownership. But when you buy a mutual fund, when you invest in mutual fund, you have by default, you've probably invested in 20 different companies, which means there's a diversification. When you invest in a stock, if the company goes down, you're gone. Like for example, DHFL. DHFL, when the crisis happened, the stock price went down by almost 95%, 96%. So which means if you would have invested in that stock alone, your money would have gone down to 4% of the original value. But in case of mutual funds, that mutual fund also would have invested in DHFL, but they didn't invest only in DHFL. They invested in 20 different companies, 30 different companies, and there was a diversification. Because of that, what happened, they could control the loss. They could control the loss to a probably minimal number, maybe 5% loss or 10% loss. But here, 96% loss. So that is the kind of benefit. Of course, in stocks as well, you can do diversification. If you have 100 rupee to invest, you can diversify across. But then who has to do it? You have to do it. But here, it's all automated. The fund manager takes care of it. You don't have to do anything, right? That really benefits you. The fourth benefit, the fourth key difference is time. In case of mutual fund, your time is nil. Like I've been investing in mutual funds since 2006. I hardly spend any time on it. I mean, maybe once in a year I might spend 3-4 hours, not more than that. But in stocks, to analyze the company, to analyze one company, or to do a proper fundamental analysis of a company, I have to spend nothing less than 15, 16 hours up to 18 hours for one company. Just imagine, if you have to invest in more companies, then how much of fundamental analysis you have to do, fundamental research. It's going to take a lot of time because you have to understand the business, you have to study their balance sheets, you have to study their director's report, you have to study their auditor's report, you might have to go through various news, their research, so much. So that is the problem. So I want you to understand, you need a lot of time, maybe 1-2 hours daily, if you want to invest in stocks. But in mutual funds, 1-2 hours monthly is enough. That's the key difference, the time.
I hope the first 4 differences between the stock market and mutual funds are clear to you now. Also, it's quite difficult to put in all the information and detailed knowledge in just 10 minutes. But there is still a lot to learn about mutual funds. If you want the detailed information on mutual funds, we have a dedicated course on the Freedom app called Mutual Fund Course. Learn the secrets to invest in the best. Alright, so now let's move on to the fifth difference.
The fifth difference between stocks and mutual fund is capital gains. Capital gains is not in your hand alone. I'll tell you what happens. The earning you make from stocks or mutual fund, it is taxed same. The capital gains, there is no difference. But then, if you are investing directly in stocks, for example, I've invested in company A. I feel company A is not doing good, so I want to sell it off. I sell, I made money, I made profit. Now I have to pay taxes on that. In case, if I've invested in mutual funds, what happens here is the fund manager does this job of selling on my behalf, right? The fund's behalf. Now what happens? He will sell company A and he will buy company B. He will probably acquire company D later, right? So now what happens? Whatever the transaction he does, he doesn't have to pay capital gains. I have to pay capital gain only when I redeem my mutual fund units. I don't have to pay every time the fund manager sells the stocks. You understand what I'm saying? Fund manager keeps booking profits, right? Whenever he books the profit, he doesn't have to pay tax. He has to, I have to pay when I receive that gain. But in stocks, since I am the fund manager, every time I buy and sell, I sell and I make profit, I have to pay tax. So that is a big difference. Many people don't look at it. The key benefit of mutual fund is that because when I'm investing for long term, 30 years, 20 years, 15 years, there is no talk of tax at all because I don't redeem it. I don't get the profits in my hand. So hence I don't have to talk about tax. For next 15-20 years I'm free. But you can't hold a stock for 15-20 years. You might have to book it in between, right? You might have to book the profits in between because you don't know, because a company which is doing good today may not do good after 3 years, right? So that is the biggest difference in mutual funds, right? And the sixth one is demat account. For investing in stocks, any stock you need a demat account. But in case of mutual funds, you don't need demat account unless until you want to invest in ETFs, exchange traded funds. So ETFs is basically those closed-ended funds which are traded in the exchange. But otherwise, normal mutual fund, you don't need demat account, right? That's again other saving you have because demat account is a maintenance cost and all that. And the seventh one is cost. In mutual fund, today, your entry load is 0. More than 1 year exit load is 0. Expense ratio is also very less. But in stocks, if you have to churn the portfolio quite often and all, the brokerages are going to be huge. You'll end up with paying a lot of brokerage. Though there are discount broking companies and all that, but still you end up with paying a lot of brokerage, securities transaction tax and all that. Keeping these things in mind, my recommendation, if you're someone who is working, busy in your business, you continue to invest in mutual funds. If you're someone who has full time, free time, you're free, you just want to be an investor, then I suggest you to go with stocks. See, please understand guys, our job should not be to invest. Investing should not be our job. Investing is a part of our life. It is not a job. We make money from doing some jobs, right? Like for example, I am into financial services business. I am into financial advising business. I know everything about stocks, but then I still prefer mutual funds over stocks because it's easy for me. Otherwise, when I'm busy talking shows, workshops, meetings, I can't really keep watching stock market. When I'm investing in stocks myself, I should be continuously watching market. What is happening? Is it going good? Going bad? It's going to take away a lot of my energy, a lot of my time. But if I invest in mutual funds, all that burden is on the AMC, asset management company. They take care of it. The fund manager takes care of it. I don't have to really worry about it. Hence, if you have a good job to do, you are busy in your business, continue doing it, invest in mutual funds. But if you are someone who want to become a full-time investor, you have all the time, you have a good amount of corpus, then you learn investing in stocks and become an expert in investing in stocks and start investing on your own. So this is the difference.
Thank you for watching. I hope you loved the video. Please make sure to drop your likes, your comments and subscribe the channel if you haven't yet. My name is Anupam Anand. See you in the next one.